All right. This is so today I'll be just analyzing AUD CHF. It has already been analyzed. Now I'm just analyzing for you, so you could see how do we find entries using the strategy that we use, which is the Falcon method. So and like this like we first identify our pivot points, on a higher time frame. You can start on a weekly time frame or a daily time frame. For those high and low points, we are looking for highs and lows, the pivotal lows and pivotal highs. So yeah, so this is what we have on our chart. So it's 1 o'clock p.m. Yeah. So I just want you to learn, how we find entries, like using the strategy that we use. So we're scaling down to low time frames. Now we have that, and we know what's going on. So on the day time frame, like one thing that I can see here is that we have a dead touch. We have a dead touch. We have this kind of structure, and then we have this. We could just say it's a channel. And then like on the channel, we buy at the trend line, and we buy at the trend line, which is the trend line support, and then we sell at full confirmations. We don't just dive in the markets, because it is now selling. To be caught on the right side, you must have the confirmations. You must you must look for certain patterns. You must look for certain patterns, and then you can go on about it. That we have here is this: we are expecting a move to the downside for the next couple of months, or for the next month or so, but I think for the next couple of months. So this is what could happen. Like on the long-term period, we just want this bars pattern. So we might see something more like this. So even if you do not get an entry today, you can still you have a chance, because the market might do something more like this in the future. It's highly probable that the market will do just this. We'll just have to wait for the market to give us, exactly what we want, and to show us what it wants to do. So we just have to read price and track. This is what I am anticipating from the market for the next couple of months. Yeah. So we will scale down to a time frame, and we see that we have a well, other people sold here, but because some of you you missed an opportunity, and we just have to wait for something more like this on a bigger time frame. I prefer to use 4-hour time frame, and an hour time frame. This is not good. Okay, we have our impulse to the downside, and now we are waiting for something that's more like this. We are waiting for the market to give us a structure, that will that will convince us that the market is now going down, and then we can expect the market to behave in this manner, correction all the way to the downside on this swing to the downside. There it is, just as we see this one. So here is what we are expecting and from the market. It's going to be a bit messy. The chart looks a bit messy now, but I just want you to have a clear picture on how the market moves. At most times. Now we are on a impulse phase. This is we were in an impulse phase, and then we are now at a correction phase, and then the correction will tell us if the market is. You must be able to read the candles, to read the candlestick patterns and the patterns themselves, the Yeah. So we also get something like this. We also get something like this. So this is a 1, 2, 3 touch, and then this adds to our directional bias that the market, could go down. It's probable that the market is now going down, maybe to this level, or we might see the 90% and then in a couple of months, or yeah, we might find the price playing at this areas. So with finding the entry, of what I have done so far, and I'm sure you can see how simple it is. The chart is very clean. I always like to keep the chart clean, so that like even if it becomes my reason behind uh, um, um, every trade that I take. So there must be confluence, so we must find patterns within patterns, patterns which will tell us, that the market could go in this direction, and then it will just add to our confidence, would all just add to the confluence, and then the winning rate would be and it would add to like the odds of us, getting this trade right. So the most anyone can see it, like the next few months, but the most important thing, one thing you should bear in mind is the entry, and oh look, this is the market usually repeats itself. It forms patterns, as we can see on the side. We have a double top. We have a double top. So for this couple of days, we might expect the price might do something like this, because it had a top here in this area. It created an area of supply, and then formed a double top, and then it just went down and down and down until it reached this point in support. So yeah, going down to the 1 hour time frame, and we'll know we just have to wait for price to give us something that we know, when something that is on our trading plan. So as a trader, it's important to have a trading plan and trade what is in your plan. The rewards are so great, they're so great that you would never ever trade something that is not on your trading plan, because it's going to hurt you in the long run. So some consolidation, and then the market will just push to the downside. So we just have to wait and sell. There are like 2 types of entries that we can use. So shit. Yeah. So we might end up getting something like this. When on finding an entry, well, we could just take a risk entry. When the market has created some sort of resistance, yeah, just take a trade, a risk entry, and then have a very tight stop loss, and then have our target. Now, that like always on a trade, you risk 1% to make 3% to make 4%. It will just depend on you and the industry. So then this is what we could aim for. And then take home. Try not to be greedy. We'll not be greedy on this one. We'll just take an entry right here, and then and then we'll just exit here. And then so if price give us something that's more like a correction, take a look at it again, and then see if it is correcting a pattern, that is a continuation or a reversal. So our short-term so our short-term buy, like our long-term bias is to the downside, and we are looking for entries right at this point. we are looking for entries right at this point. The market has to give us, we can execute. So so the patterns that we might find here, we might find something like this. We might find a flag. Like, you have to know the possible scenarios, that the market can give you. Like, there are a lot of scenarios, that the market can give you, and then you just have to know all of these continuation patterns, and how they will play out, how they might play out, and how to enter at the right time. Yeah. So we have our impulse, which is the impulse. We have our impulse, and then we are now correcting, we're now correcting, and then we might expect to find us, yeah, we are at our impulse, and then the market might end up doing something like this. It might change the structure, and then we might find something that's more like an expanding triangle, which will be something like this. So we must be very familiar, with all these types of patterns and how to trade them, how to use them to find entries. Oh, it's that simple. It gives us something that we are familiar with, something that we can work with, something that can allow us to be in the market, to be involved in the markets. So we also look at, when the price reaches this area, maybe you can look at the 15-hour time frame, just watch the price reaction, when it reaches this point, then you will know that the market is now ready. I can sell now. But I just feel like the market will just consolidate maybe a day or two. You should always be, like, always be on high alert, so you could find a perfect entry. So you could find an entry, yeah. And then the next type of entry that we could, have, yeah, the reduced risk entry, and then it will have a very wide stop loss. It will have a very wide stop loss, and then it will be something like this. And then the risk to reward ratio won't be the same as the one that we had, but it is still it is still huge. The rewards are still huge. This is it. Yeah.